Well, hello and welcome to today's Trade Floor Update. I'm joined by Portfolio Manager Aaditya Thakur. AT, we had the RBA put a second consecutive hold on interest rates at 4.35%, which was broadly what the market expected. But what was the rationale that was given for that hold?
Yeah, it was a strange meeting in the sense, I don't want to torture a sporting analogy, but it was almost like a game of two halves. You had a statement and a set of updated forecasts, which lent dovish, but then you had a press conference where Governor Bullock was explicitly, quite hawkish. So we have to kind of figure out what's going on there. It's almost like we got to see, this is what we think, but this is also how we feel, and those two things are in contrast. In terms of what they think, the data was pretty clear in their forecasts. They have unemployment now peaking at 4.8%. So that's 20 basis points above their estimate of full employment. So we're moving into a period of spare capacity. And as a result, they now forecast underlying inflation to hit 2.4% in 2028. So that's actually below the midpoint of their 2 to 3% target band. And that's a signal that policy is very restrictive. It's restrictive enough to get inflation down. And really it's a signal that they're likely done. So that's what the forecasts were telling us. But in the press conference, when Governor Bullock was asked, how do you see the balance of risks? She was quite explicit. She said she sees the balance of risks to the upside. And she said personally, we may need to hike one more time should those upside risks materialize. So, I think there's two elements to that. I think one element is it's just partly jawboning. It's too early to declare victory on inflation, and they don't want to preemptively ease financial conditions unintentionally. But secondly, they're just expressing a very low tolerance for any upside surprises. So that's important for investors. But how do we reconcile these two things? This is what we think and this is how we feel. How do we reconcile that? Ultimately, they're paid to set monetary policy based on the facts, based on data, and that's why we think, how they think and the data will trump how they feel.
Yeah, obviously they've got a very clear mandate and they're very clearly going to stick to that. In terms of our own views, how do PIMCO sort of see things? Are we seeing more risks to the upside, as Governor Bullock mentioned, or is there actually more downside risks in terms of how interest rates are being transmitted through housing and those sorts of concerns around the economy?
Yeah, I think in contrast to Governor Bullock, we actually see the risk to the downside. If we think about it, we've got a consumer now whose real incomes are being hit by energy prices. You've also got house prices that are falling, slightly more than what people were expecting, and we're kind of expecting house price falls in the kind of high single digits. You now also have fiscal policy turning slightly negative, so the fiscal impulse turning slightly negative. So for the first time in a very, very long time, we have monetary policy, fiscal policy, and asset prices all working against the consumer, not working with them. And that's why we think there's a little bit more downside risk. We actually think that inflation will come off, the process of disinflation will be a little bit faster. And by the end of this year, we'll be thinking about rate cuts, at least just a couple of rate cuts in 2027 rather than further hikes. So that's where we kind of differ from the RBA. And with the market already pricing in almost a full hike to go, and 10-year government bond yields at 5%, high quality investment grade spread product yielding 5.5% to 6.5%, we think that active fixed income portfolios provide a fantastic opportunity for clients.
Yeah, fantastic. Well, thank you everybody for tuning in. And as AT mentioned there, an exceptional opportunity to enter into fixed income and take advantage of those high yields and the potential for capital appreciation if we do see those downside risks materialise. If you have any further questions, please do reach out to the team. We'd be more than happy to help. Otherwise, we'll see you next time.